ladies and gentlemen, and welcome to the Ash Show. This week we're gonna go through all the plays that we had from last week, how well they did or how poorly they did, what lessons we learned from them, and then I'm gonna walk you through our plan for the next week. It's gonna be very exciting. Just like last week, I have a few plays for you on the watch list. I got some earnings plays and I got another potential 10 bagger play. So let's get started. Now before we dive into this, please make sure to like this video, subscribe, and share it around. If you're getting anything out of this, this is how you can support me. I don't sell anything, I don't make any money off this. So if you want to support me, if I help you in any way, please subscribe, like this video, and share it to anyone who you think would like this. We also have a Discord. I'm there 24/7. I answer any and all questions, strategies, plays. I post my intraday exits and entries on there, Twitter as well. So make sure you have a look at the links down below. So without further ado, let's get into it. So first one here, we have the SPX dump at the open, right? So this one went exactly as planned. We got the SPX puts here pre-market, and just as the market opened, it dumped. That was a 300% play. All good, no lesson to be learned here. We also expected that after the dump, we would get relief rally, right? So just as expected as well, you know, we dumped right at the open and then we started climbing our way back up. Actually, we still are to this day. And, you know, like we said here, our plan was we're gonna close our Friday calls before the Jay Powell speech. And I did that around the 4,000-ish level, right around that range. That was around 150% play. It was a little bit lower in percentages because I took out a Friday call, so nothing off note here as well. Okay, now our first money losing play, right? So DWAC was our potential 10 bagger. There is a lot of playing around here. They kept pushing and delaying the vote, so we got in late. By the time the market opened, it was already 20% down in the PM. So if you have been a little bit early on this play, we'd have made a killing. Okay, but even still, like we got in, and you know, it popped up at the open, hit the 200 MA, and it just kept going down. At one point we were up 50% on that play, but then, you know, right before the market closed, news came out that, you know, the sponsor will loan them the money even if they don't get the votes. And of course, you know what happened. No, this one was a complete loser. This one went to zero. Just FYI, I am not done with this turret. We will be revisiting this again on the 10th of October, or before the 10th of October, when they hold the vote again, right? They failed to get the vote, so they just keep delaying the inevitable. We will get our 10 bagger on this one. So lessons learned from this one here is getting in late obviously was the first mistake. Not following my own personal rules for taking profit when I'm at 50% or above. This was the second mistake here. So I'm gonna make sure not to repeat the same mistakes in the future. Next play here we have Sava, S-A-V-A, right? So this one was an absolute beast, right? This one ran, I think so far it ran up like 15% from where we got in, right? The only problem here is that I got leaps, I got January calls, so the profit is not super crazy. They are up around 35%, 30% last time I checked, but hey, green is green. I'm super happy with it. So far so good. I might trim a little bit if it gets to 50%, because we don't want to repeat the DWAC mistake. But the main play here is that we're waiting for the initial results of the phase 3 testing. We're waiting for the final results of phase 2 and initial results of phase 3. Okay, so lessons and takeaways here is that I should have added some short-term calls. There was a lot of chatter and a lot of momentum going into this play from Reddit, so I should have taken some short-term calls along with my long-term calls. Okay, on to our second earnings play. We have GTLB. Absolute beat monster, right? But this one kind of played with us a little bit here because we beat earnings, revenue, EPS, everything. We beat guidance and it fell on the PM. This thing just like completely dropped. I think it was just some shorts playing around, or someone with huge amount of shares who just sold off and freaked everyone. But whatever the case is, it opened up a little bit red, and of course because of Ivy Crush, our puts were down 50%. So I averaged down a little bit here because I saw no reason why it would just stay down, and I was right. As a matter of fact, from that point up until here, I think the stock is up around 15, maybe even 20%. Unfortunately, I didn't hold that long. I was pretty happy when I saw it turning green. I took 10% profit and I called it a day. If I still had these calls till Friday, they'll probably be up 100% plus. But still, beats, going the DWAC route. So takeaways here is I should have placed a stop loss instead of selling right away and seeing where it went, or I could have trimmed. But I think I did the right thing here. This is, when something is very red and it turns green, you just call it a day, you move on. All right, Neo. So Neo, this was a straight up bad call. Let's just call an ace and ace here, okay? This was not a GTLB situation, although it turned out the same. But no, they messed EPS. They only beat revenue. Guidance was very bad. So yeah, I mean, we got lucky. I think because of the market pump, it just pumped immediately after the market opened. I think it ran to 18.5 or something like that. And I sold for a 20% profit. Let's be honest here, I got lucky on this one. This was a bad call, but hey, profit is profit. So lessons to learn here is that for this particular play, I relied mostly on options flow, which was very, very weak, which makes sense because this one has a very low price per share, right? So of course, most people are going to be playing shares rather than options. So this should not have been the factor to look at when it comes to these kind of plays. So lesson learned, we'll keep that in mind for the next one. GME. Okay, this one along with DWAC was probably what you guys mostly were looking at. Funnily enough, these two went very much the opposite of what we were hoping here, what everyone was expecting. So GME did miss, right? They missed earnings, they missed revenue, they missed guidance, but they announced a partnership with FTX. So good thing here with GME is that I bought the puts on Tuesday, and they were up 75%, so I had to sell them all and take profits. I rebought with the profit, so of course, with when it opened up, it kept running and running and running up until Friday. So of course, my puts went to zero. So I am kind of broke even on this trade because I only went in with profit. So basically, I broke even, but it's really a shame. I mean, this one should have tanked, but it is what it is. So takeaway here and the lesson here is that this stock has a lot of supporters, right? It has a hardcore following, okay? So any kind of news, no matter how trivial it is, this is a gift card partnership. No one buys really gift cards. It's not going to do anything for the company, right? So what I should have done is I should have bought further out calls, which actually people commented this on the Reddit post, and they were right. I should have bought out further out calls because if the market goes down, this one will go down very hard with it. It's only running because the market is running. So this is the takeaway here. So for future plays, I'll be taking a little bit further out calls, not same week calls. Okay, so the next play here we had is the dump after the Jay Powell speech. Okay, we were expecting the end of the relief bounce and then a dump after Jay Powell's speech on Thursday, right? So we did get sort of a dump, which I think happened because of the Queen Elizabeth news. But anyway, it kept going. We got lucky here with the drop. I had puts because it went up to the level we expected, which is 4017-ish, right? So I had puts and it went down and I was expecting it to go down more. Luckily, I had my stops in place and it hit my stops. I only made 50% on this one. It was at some point 75, I think 80 or 90%, something like that. But luckily I had my stop loss. Could have been a complete loss because it just kept going up, and yeah, hit my stop loss. I got my 50%, and there was no play for me after that because I wanted to see what happened. It just kept going up and up until Friday. So next play here is DocuSign. Okay, so not really much to say here. Everyone was expecting a miss. I think consensus across the board was they were going to miss. They didn't. They beat everything: revenue, EPS, guidance. Ran up 20%, so puts went to zero. I really have no takeaway from this. I don't see what I could have done differently. So yeah, it was one of those things. It was a bad call, and yeah, puts got screwed. Okay, Kroger, KR. That was a good one actually. They beat earnings. They didn't run too much though. Even though the market was bullish, I don't know why, but we made 15% off that one. I sold it at the open. And not bad. Green is green. It was a good play. 15% is 15%. It's not nothing, right? So really, again, no takeaways here. It is what it is. Now, for the last things on our watch list was Microsoft and Apple. I took no plays because it never hit the levels we were talking about, so I just didn't play them. Okay, so now that we have last week wrapped up and behind us, this week is going to be pretty damn exciting because we have CPI numbers coming out and we are at pivotal levels. Whatever happens on Monday morning will dictate how not only this week's go, but I think this will dictate how the rest of the year will go. Okay, so first things first, let's start with the earnings. Okay, so we don't have a lot of earnings this week. We have on Monday the 12th of September, we have after close, we have Oracle. Okay, so Oracle is of course the huge database company. The earnings should be after close at 4:05 p.m. and estimated EPS numbers is $1.07 and revenue is 11.3 billion, right? So for unusual options here, we have the 75 strike with the highest open interest with a call put ratio of 1.37, right, for the 16th of September. So options here are pricing a 6.7 move on earnings. So just to be honest with you guys on this one, I'm not really seeing anything. The chart is not saying anything. I'm not really seeing any unusual options in this one. Everything seems pretty neutral. I'm a little bit leaning towards puts here, taking a very small position. Usually I take 5% on earnings of my portfolio. I think I'm just gonna do like maybe 2%, or maybe even just skip it, right? Because I'm not really seeing any data to point us one way or the other. Okay. Now on Thursday though, we have on Thursday the 15th of September, we have after close we have Adobe. Okay, now everyone knows Adobe. It's the package software company. It does Photoshop, you know, etc. Premiere. We all know it. It's a big company. Earnings are expected to be after close at around 4:05 p.m. and estimated EPS is $3.33 and revenue is $4.4 billion. Okay. Now we have for unusual options here, the 390 strike is the one that has the highest open interest in the options chain, right? So we have a call to put ratio of 9.93 for the 16th of September expiry, okay? And options here are pricing in a 7.5% move on earnings, okay? So a lot of people I think are very bullish on Adobe going into earnings, okay? So I'm just gonna go with the flow here. My play will be 395 call that expires on the 16th, okay? I mean, DocuBeat here, they are kind of similar, not similar companies, but similar niche, if you will. So I think a beat is likely here too. All right, so this basically wraps it up for earnings, okay? I already bought my calls last week to avoid the spike in premiums. Lot size only 5% or less, so just something to keep in mind. Alright, for the juicy main part, this is what I'll be mainly playing next week, the major economic events. So here going into CPI with a very interesting and very bearish SPY hourly chart, okay? We're right at the 200 MA, we have a very overbought RSI that remained overbought for all of Friday, and we have a very big gap that needs to be filled. Okay, so from a trend point of view, we are at a very critical level here. For the market to continue its downward trend, it needs to make a lower high right where we are right now. We need to make a lower high right here and just keep going downwards, because if we break up, well, this is no longer a relief bounce. We have a reversal on our hands here. So from a technical standpoint, everything points to a big sell-off on the CPI read. So in any case, here's the game plan. Here are some scenarios that might happen and how we're gonna play them. I wanna cover all our bases, so whatever happens, you know exactly how to play this. So scenario number one is we see a sell-off all the way down to fill the gap, call up the chart, reset everything, and then a retest of the 200 MA. Now with the retest, we have people shorting all the way down here, getting trapped. This will trigger a short squeeze, okay? In which case, the game plan here, if this happens, is that our first take profit target will be the 4012 level, right? Which is right at the gap fill, right at or maybe even below, just to be safe. Now after that, you don't want to be getting in calls right away. We have the 21 MA between the gap fill and the 200 MA. So what you want to do here is you want to see what happens with 21 MA. If it goes up, tests the 21 MA and then falls down back, then it's puts. If it breaks through and keeps going up, then it's calls, right? So you have the 21 MA here as your level of confirmation, okay? Now this is scenario one. Scenario two is that we can see a sell-off, right, and a hard reject of the 200 MA just like we did in August, and it just like keeps free falling down. In that case, the next level here will be the 50 MA. I would just place my first stop. If it passes through the gap fill level, I would place my stop loss above the gap fill level at 401.2 just to be safe, and my first take profit target will be the 50 MA. Okay, now the third scenario here is that we can see a big sell-off when the futures open on Sunday, and we can see it drop all the way overnight, all the way to the CPI, right? Have the chart reset and do everything on the PM, right? Everything is cooled off, and then the CPI read to come in below expectations, and we see a run up. In which case, you just buy your calls, when the market opens, just be aware of the morning flush, and wait for the pullback, get in your calls, and yeah, we should be running up. Okay, my thinking here is that I really don't see a scenario where we don't dump, either just to reset the charts and prepare it for a run up, or because we just had like above expectations numbers, and we just keep going down and down and down, making new lows, right? So for that reason, I already have a starting position of SPX puts. I have the 3,990 put that expires on the 14th. Okay, I will be religiously taking profits here and managing stop losses, keeping everything tight, okay, because we don't know how this will go. And if you want to join me on this play and you don't know, you can buy SPX when the futures open overnight, right? So whenever they open up on Sunday, you can actually start getting SPX calls or puts. You can do the same thing in the PM. I don't think it works with all brokers. I think it's not allowed for US customers. I'm not sure. You guys are gonna have to double check on that one. Now, the rest of the week, this is where it starts getting very tricky, okay? Here are the last 5 CPI reads and what happened after. On April 12th, which was a Tuesday, we dumped on the read day, and we continued dumping for the rest of the week. Okay, on May 11th, which was a Wednesday, we dumped on the CPI read day, and we pumped for the rest of the week. On June 10th, which was a Friday, we dumped on the read day, and then we continued dumping for the rest of the week. On July 13th, which was a Wednesday, we dumped on read day and then pumped for the rest of the week. On August 10th, which was a Wednesday, we pumped on read day and then pumped for the rest of the week. So as you can see, it keeps alternating every time. The data here is very inconclusive. This trend continues, then whatever happens on the CPI read, the opposite should continue for the rest of the week, right? So maybe it dumps on CPI read like I'm expecting, and then just pumps afterwards. Now, of course, this is not anything you should be going on. This is very unreliable. This is not something you should take seriously. But on a much more serious note, though, luckily we are at pivotal levels here, and this is why I think whatever happens, we're probably gonna follow through for the rest of the week. Okay. Now, the last 2 CPI reads showed that inflation was decreasing. It was 9.1 and then 8.5. Okay. Now we're expecting a headline read this time of 8.1. These are the expectations, okay? And as a matter of fact, we're even expecting deflation this time for August for a read of minus 0.1. So here's the thing, if we get those numbers at or below 75 points off the table, will not even be discussed, even though the market already priced it in. So we can expect a big pump up, okay? Not only that, my expectation is now we're not just gonna pump this week, we're gonna pump the rest of Q4 all the way into the year's end, okay? Because I think with numbers like that, the pads will start pivoting, okay? So we get expectations, you see 8.1 headline or below, you get in calls. You see anything above, you get inputs. We're probably gonna, this is the bearish case, we're probably gonna make a new year low, because that means inflation is no longer going down, is going up. The Fed is gonna have to be a lot more aggressive now, because in this case 75s are not working. 100 point gets on the table, which, as you guys know, can be very disastrous. We are talking recession here. Okay, so just to go through the calendar here, so we have on Monday the 12th of September at 8:30 a.m. we have the CPI read. On Tuesday the 13th of September at 8:30 a.m. we have the PPI. August read. On Wednesday, the 14th of September at 8:30, we have retail sales for August, and we have the initial jobless claims month over month for August. Okay, these are two important numbers, but of course, given what we have this week, they won't really affect the market that much. On Thursday, the 15th of September, we have the Michigan consumer sentiment, which at that point, like, I don't really think that will affect the market at all, right? I am personally leaning towards a drop and pump here, but honestly, I gave you all the scenarios. There is no need to guess here. We have our levels, we have our plays, no guesswork. We have data to work off. Don't rush to get into anything. You will get your plays, don't worry. Even if you can't catch it on the same day, even if you can't catch it before the open, you will have multiple opportunities, because whatever happens here is the start of a big move, either a big move up or a big move down. So no rush, just take your time, get in on pullbacks, and play smart. Okay, so for the watch list this week, we have Nvidia. Now Nvidia, if we look at the chart here, we have a small gap to fill here all the way up to the 150 level. If the market continues running up, we are going to fill the gap, so that play here obviously is calls. Okay, now Tesla here itself is at a pivotal point. It has been going sideways for a while now. It should make a big move one way or the other, whatever the market decides. Okay, so the sentiment is bullish and will break the 315 level. We might get to 364 level very quickly. Okay, now on the other hand, if the market is bearish, we go back to the 50 MA very quickly, right? So, and if we lose the 50 MA, 207 is the next target. Okay, so watch out for the CPI read, watch out for these two levels to break to pick a direction. Okay, now UPST here is another bullish play. If the market is bullish, UPST is another gap fill play. It has a gap to fill all the way up to $30. That is a 15% move from current prices. Okay, so same week calls here will print very hard if the market is bullish. Okay, now on the other hand, if market is bearish, a play here will be QQQ. QQQ, the reason for that is tech stocks will be the most affected if we get into a recession, right? If things starting to go down, because PE ratios are very high, so these will take the brunt of the beating. Okay, so the market starts going down, you are gonna want to grab some QQQ puts. Okay, so for my favorite part of the video, our bonus potential 10 back play. Okay, now this week's 10 back play kind of hinges on the market being bullish. Okay, this play is invalidated, the market is bullish, but we can return to it later on. Okay, because I think this play will happen one way or the other. This play is Netflix. Okay, Netflix has $100 gap to fill from where we are at right now. Okay, now if you look at the chart here, we see that Netflix has been channeling between 217 level and the 249 level for the last 2 months. Okay, sooner or later this gap will fill. This stock looks like it's begging to fill that gap. Okay, and once we break out of this channel, believe it or not, I think this gap will be filled not in weeks, but probably like 2 to 3 days. Okay, if the market is bullish, we have a good CPI read, yeah, I expect this gap to get filled very quickly. Now we have two scenarios here. Either the market is bullish, starting at CPI all the way through FMOC, so when we can see that gap fill, or if that doesn't happen, it might be waiting for earnings, which will be on the 17th of October, almost a month from now. And if we beat earnings, then the gaps fills. So like I said, in all cases, I think this gap will be filled sooner or later. You can see it holding its current levels. It seems to have bottomed out between this channel. It refuses to give it up. Okay, now if the market conditions are bearish, CPI rate is bad, then we can still revisit this play on the 17th of October on earnings. Okay, but for now we need bullish outlook on the market. Okay, and we need to watch for a break of the channel. Once that does, we can get into calls and we can see a quick gap fill for a huge potential 10x plus bagger here. All right, so that's it, guys. We have very big week coming up. As promised, this is the watch list for this week, my plays for this week, and a revision of the previous week. So next week will be the same thing. If you have any questions, please let me know. And of course, this is not financial advice. Do your own DD, trust no one, not even me. So if you haven't subscribed and if you haven't liked this video, please do. This is how you guys can support me. Also have a look at the free Discord and a Twitter down below. Give these a follow. This is where I post my intraday stuff and answer questions. Thank you for tuning in and hope you have a green week. This has been Ash, and thank you for watching.